Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking this evening. Global stock markets remain downbeat after the US Fed hikes rates by 75 basis points, sending hawkish signals. Fed Chair Jerome Powell says there is still some distance to go on rate hikes to tame inflation. The Wall Street ends a volatile session with minor losses amidst a global sell-off. Bank stocks buck the trend, ending in the green. The rupee weakens against the dollar, moving closer to the 83 mark. The RBI Monetary Policy Committee gathers for an unscheduled meeting to draft a letter to the government on missing its inflation target. This is the first time inflation has stayed above 6% for 9 months in a row since the new MPC framework was adopted in 2016. India's largest mortgage lender, HDFC, beats estimates in Q2, asset quality hitting the highest level in nearly 3 years. Retail assets under management at a 5-year high. The World Health Organization responds to CNBC-TV18's queries after a regulator in Gambia said they're yet to confirm if cough syrups made by India's Maiden Pharma led to the death of 70 children. WHO says while it's hard to establish a causal link, 4 brands manufactured by Maiden Pharma had unacceptable levels of contaminants dangerous to human health. Investments are yet to take off under the production-linked incentive schemes for farmers. Industry blames delays due to the pandemic. Only 21% of the total investment committed has been deployed for raw material manufacturing and 16% deployed to make medical devices. But industry believes things could pick up. The Heavy Industries Ministry takes a tough stance, makes it mandatory for electric vehicle makers to carry out certain tests from April 2023 in order to avail of incentives under several schemes. More than a dozen incidents of electric vehicles catching fire have been reported since March. WhatsApp rolls out its discussion group feature communities. It will enable users to have multiple groups under one umbrella. The instant messaging app also introduced a new feature including in-chat polls, 32-person video calling, and groups with up to 1,024 members. The Election Commission finally announces dates for the Gujarat Assembly elections. Polling will be held in 2 phases on the 1st and 5th of December. Results will be announced on the 8th along with Himachal Pradesh. Vijay Mallya's lawyer requests the Supreme Court to relieve him from representing the fugitive businessman in a special leave petition case. Says there's been no communication from Mallya. The Apex Court has already sentenced Mallya to a 4-month jail term for contempt. He's also facing extradition proceedings in the UK. Elon Musk is likely to cut Twitter's workforce by 50%. This will mean 3,700 people could be laid off as Musk attempts to cut costs and reshape the company. Well, let's start with the market action. The Wall Street managing to recoup some losses in late trade, even as the Sensex and the Nifty ended in the red. The sentiment across global markets was downbeat after the US Fed rate hike, as well as the hawkish commentary. But India did manage to outperform its peers. Bank stocks bucked the trend. The Nifty Bank Index ending in the green. Prashant is standing by to wrap up the market action for us. Prashant, managing to stay resilient even through a difficult day.
Well, unqualified victory for bulls once again. The market ending 35, 40 points lower after the kind of disastrous session US markets had. And who would have thought? But it's typical of the market outperformance we've seen on so many big days for so many months now. Mid-caps and small caps did even better. I mean, they actually ended higher, unlike the Nifty. Banks came back, PSU banks in particular. The PSU bank index was the top gaining index on the market today. On large caps, Nifty stocks, SBI did very well. Titan, UPL and HUL gained as well. On the downside, technology was a little weak. Infosys, Tech Mahindra, Power Grid, which had done well recently, and Hindalco pulled back some of those gains from before. Now, in the broader market, I mean, mid-caps, etc., it was a results reaction day. Companies and stocks responding to results which came out today, and some continuing this reaction from earlier in the week. So Mahindra & Mahindra Finance, big reaction, good set of numbers. Varun Beverages, commentary from the management was pretty good. Karnataka Bank, second day on a trot. Reddington reported decent numbers. Rally continues. Bank of India, UCO Bank, and Indigo Paints, which reported in the last hour of trade, also ending pretty strong. On the downside as well, it was disappointments which mattered. Voltas and Relaxo were the two standout losers on the back of earnings which came in below. The post-Fed second-day market reaction is going to be important to track in the US, whether there is continued pressure or some stability to be found. The message from the Fed is pretty clear that rates are going to be moving higher. The pace perhaps is slower, but I mean, rates are going to stay higher for longer as well. The resilience and outperformance here in India, that has also continued. And I think we are back to where we started, which is pressure in the US, macro picture not looking all that great, but flows and the fact that amongst emerging markets, India perhaps is the bright spot, shining and coming through. Back to you.
Prashant, many thanks. In the money market, the rupee weakened against the dollar. The hawkish commentary that came in from the Fed meant that the dollar index gathered strength against most major currencies. As things currently stand, $1 US costs nearly 83 rupees. Former RBI Governor Raghuram Rajan has termed the Fed's policy hawkish, said rates will continue to rise in the short term. Several investors have accused the Fed of sending mixed signals. Abhishek Datta Roy and Ritu Singh report on the varied reactions that have come into the Federal Reserve's latest monetary policy.
The Jerome Powell-led Federal Reserve pretty much stuck to the script, approving a fourth consecutive 75 basis point hike in benchmark interest rates. Their intent reasonable. US is currently grappling with a 40-year high inflation rate. However, the markets were expecting Powell to adopt a more dovish tone and hint at rate hikes of a lesser magnitude going forward, and that initial statement seemed to hint at that. It said, and I quote, "The committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments," end of quote. Wall Street started to rally, but it was short-lived when Powell took to the stage and said,
"We still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected."
We still have a ways to go. The message from Powell was clear. Rate hikes are likely to continue.
Fed raised interest rates as expected, but Chairman Powell also came in with, slight mollifiers for the market. Yes, over the next meeting or two, we will start slowing the pace of rate increases, but we're going to go higher than you expected. Because, he did say that we haven't seen much of an effect on inflation yet, and the labor market is red hot, so we need to do more. I think the one additional piece of dovishness was we don't need to see inflation come down significantly before we slow the pace of rate hikes. So that, for a while, the market took some comfort from that. But in general, it was relatively hawkish.
Stock markets went into a tizzy, and many investors accused the Fed of sending confusing signals.
Sometimes referred to the FOMC as the Federal Open Mouth Committee. There aren't too many of them that are just too anxious to speak. Chairman Powell really just came out with the most hawkish position. I would call it Volcker 2.0, basically saying, we're just going to raise interest rates until we find the level that starts to convincingly bring inflation down.
Yardeni was referring to the late Paul Walker, who served as the Fed chair from 1979 to 1987 and is widely credited to have tamed the high inflation that plagued US during that period. In fact, Jerome Powell, while speaking at a conference in 2019, referred to Walker's memoir, Keeping at It, The Quest for Sound Money and Good Government. He said, and I quote, "I actually thought I should buy 500 copies of his book and just hand them out at the Fed," end of quote. Powell also defended the actions of the Fed so far.
I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program that we've gotten this far this fast.
The key policy rate in the US stands at 3.75 to 4%. Citi has raised its expectation to 5.25 to 5.5%, hinting that there is room for rates to go up by another 150 basis points. If this turns out to be true, Standard Chartered expects the rupee to depreciate beyond 84 levels against the dollar.
Well, reactions coming into what came in from the US Federal Reserve. With UK inflation running at a 40-year high, the Bank of England is expected to announce a 75 basis point hike in its interest rates. Analysts say it will be the biggest since 1989. Remember, the new Prime Minister Rishi Sunak is expected to unveil his fiscal roadmap on the 17th of November. The RBI Monetary Policy Committee gathered today for an unscheduled meeting to draft a letter to the government on missing its inflation target. This is the first time inflation has stayed above 6% for 9 months in a row since the new MPC framework was adopted in 2016. Governor Shaktikanta Das said the RBI doesn't have the privilege to release the contents of the letter, adding it shouldn't be assumed that the contents of this letter and the report are going to be perennially under wraps. Earnings. India's largest mortgage lender, HDFC, beating estimates in Q2. Asset quality hit the highest level in nearly 3 years. Retail assets under management at a 5-year high almost. Abhishek joins us now with the details. Abhishek.
Well, operationally, it's a strong quarter for HDFC Limited. Let's take a look at the asset quality, which is perhaps one of the best in last 11 quarters. So the overall gross NPA ratio is at 1.59%. This compares to about 1.78% in the previous quarter. Even the non-individual gross NPA ratio has now come down to below 4% level at about 3.99% when compared to 4.44% in the previous quarter. In the overall AUM growth, retail AUM growth actually stands out given the fact that individual AUM has grown by 19.1% on a YY basis, which is perhaps the best that you are seeing in last 19 quarters. So cost to income ratio has dipped down to 8-quarter low of 9.1% when compared to 10.34% in the previous quarter. So this has driven a strong operating profit growth up about close to 48-49% on a YY basis and about 15-16% on a sequential basis. Loan growth has not meant that the net interest margin has improved. It's largely remained flat at about 3.4%. However, the spreads have improved by 3 basis points sequentially, coming in at 2.28% when compared to 2.25% in the previous quarter. So P&L, both the NI and PAT is a beat on our poll. Back to you.
Abhishek, many thanks. That's HDFC's numbers. Now, India's services sector has gathered momentum in October despite inflationary pressures. The S&P Global Purchasing Managers Index increased in October to 55.1 from September's 6-month low of 54.6. The figure remained above the 50 mark for the 15th month in a row. Snack maker Bikaji Foods kicked off its 881 crore rupee IPO. The Rajasthan-based company has priced its shares in the range of 285 to 300 rupees a share. Nearly 50% of the issue was subscribed on the first day as of 4 p.m. The retail book subscription also closed 80%. There is another IPO, in this one from the healthcare space. Global health operator Medanta chain of hospitals launched its 2,200 crore rupee IPO. The public issue has been priced between 319 to 336 rupees a share. Overall subscription stood at over 20% as of 4 p.m., while the retail book was subscribed only 9%. The World Health Organization has responded to CNBC-TV18's queries after a regulator in Gambia said they're yet to confirm if cough syrups made by India's Maiden Pharma led to the death of 70 children. WHO says while it is hard to establish a direct causal link, 4 brands manufactured by Maiden Pharma had unacceptable levels of contaminants dangerous to human health. A CNBC-TV18 exclusive news break suggests that the government is considering bringing in an additional production-linked incentive scheme for the pharmaceutical sector. But this time, the target is manufacturing of vaccines. As we wait for clarity on the contours of the new scheme, let's review the performance of the 3 PLI schemes that were rolled out for bulk drugs, medical devices and pharmaceuticals in 2020. Ekta joins us now to give us a status report. Ekta.
Thanks for that. Well, let's start with the PLI scheme for key starting materials, drug intermediates and active pharma ingredients, or APIs, which had a financial outlay of around 6,940 crores. A total of 239 applications were received and 49 applications were selected for 32 products. As of December 2021, only 21% or 775 crores of the total investment committed of 3,685 crores was deployed and 3 projects were commissioned. For medical devices, the financial outlay was around 3,420 crores. A total of 42 applications were received, of which 21 applications were approved. As of December 2021, a total of 167.3 crores was invested, which is close to 16% of the total commitment of a little over 1,050 crores. Lastly, the largest was the PLI scheme for the pharmaceutical sector. It entailed an outlay of around 15,000 crores, which is spread across biopharma, API, autoimmunes to anti-diabetic drugs. The operational guidelines were issued in June 2021 and a total of 278 applications were received, of which 55 applications were selected. Industry experts suggest that slow offtake is likely because the rollout of the PLI scheme coincided with the height of the COVID-19 pandemic, when pharma companies were focused on critical investments, which resulted in delays in commissioning of PLI projects. Also, companies take at least a few months to maybe a year to sometimes finalize investments, which is why we could now see more projects commissioned under the PLI versus what we saw last year. In fact, large companies such as Aurobindo have their PLI project commissioned, with the company investing around $8 million in Q1, and the project is likely to come on stream by April 2024. Even the likes of Sun Pharma and Dr. Reddy's did benefit from PLI in the quarter gone by. While the quantum is not known, Sun and Dr. Reddy's have begun accruing benefits as they invested the mandated capex to scale up existing products that were a part of the scheme. But are there issues with the current structure of the PLI scheme? Yes, say industry insiders. Companies say the PLI scheme needs to be opened up for more products. For example, the medical devices space should be opened up to encourage investments in products that are consumed in bulk, such as glucometers, thermometers, and not just high-end devices. Also, companies feel they should be able to apply for the PLI scheme on tap with longer timelines to achieve the targets put out.
Ekta, many thanks for joining us. That is the PLI report card for the pharma sector. Expectations, Ekta, pointing out that things will pick up from here on. Time for us to head into a short break, but up next, WhatsApp rolls out new features. We'll tell you what when we return. The Heavy Industries Ministry has made it mandatory for electric vehicle makers to carry out certain tests from April 2023 in order to avail of incentives under several schemes. This comes after more than a dozen incidents of electric vehicles catching fire have been reported since March. Parikshit is standing by to take us through the details. Parikshit.
Well, the Ministry of Heavy Industries for the past several months has been looking at the supply chains, the localization levels and the books of all EV makers very, very closely. In some cases, incentives under FAME have been stopped. In some cases, the incentive rollout has been slowed down because the government, the Ministry of Heavy Industries, has been receiving certain complaints as well. Now what has happened is that the Ministry of Heavy Industries has issued clear mandatory test guidelines which every EV maker in the country has to meet in order to avail incentives under the PLI for automobiles and components, which were already rolled out 1st April 2022 onwards. Also for the FAME 2 incentives, which are already in progress, and they will also be applicable to companies which will be availing incentives under the ACC PLI scheme. So what are these tests for? The guidelines say that in order to enhance human safety, there are mandatory tests for battery pack, BMS and cells. Cells to be subjected to tests such as impact test, temperature